Hey everybody, Patrick Jackson with Mann Mortgage with this week's market update. Today is July 28th, Thursday, and it's about 1 p.m. on the West Coast. And yesterday we got some big news with the Fed going forward with their planned and expected 0.75 point hike to their rates. Keep in mind, like we talked about before, when the Fed raises their rates, it sounds scary, like the mortgage rates are going to go up at the same time. But in fact, the main cause for mortgage rates rising over the last 6 months or so has been inflation rising. So the Fed raising their rates and other entities across the globe, that's their main way of fighting inflation within the country. So going back, with them raising the 75 points over or 0.75 point overnight, it looks like the average conventional rate has dropped down about 1/8 point to 1/4 point, which is awesome. And you go back to June 15th when they last made a 0.75 point hike. Right before then, we were probably at the highest rates were in our industry. And since that point, if you factor in that raise and things that have happened since then, plus yesterday's raise, we're at about almost a full point of improvement in mortgage rates since then. So like I said, that just goes to show you that inflation bad for us. Fed raising the rate tends to be good for mortgage rates. How well that goes to curb inflation is the jury's still out for the Fed. Depending on who you talk to, some think they're doing a good job, some think they're not doing enough. But as far as what we're looking at, mortgage rates, that so far has had an improvement. The second piece of big information we got this week was today, where they came out with the advanced look at the United States GDP for Q2. So that came in at a negative 0.9%. It was expected to be slightly positive. By coming in negative, that would make two straight quarters, that would come in negative, which always historically has meant we're in a recession. A lot of people, policymakers like Janet Yellen, are claiming we're not going into recession. But all I can say is all we can do really, your crystal ball is as good as mine. So all we can really do is look at how things have done, historically, look at the historical data, how things have done in similar situations. And always in the past, when we've had two straight quarters of a negative GDP, we've gone into a recession. So, as far as I can tell, it looks like we're going into a recession. So just keep in mind that during recessions, housing tends to stay strong. The only really time that housing has fallen off during recession is the 2008 recession caused by housing. We're in a much different environment than we were then. This recession will be caused by a lot of global issues, inflation, the war in Russia, the pandemic, supply chain issues, all that kind of stuff. And then the two main differences, really in my point of view, would be if you go back, 2008, my industry, lending, was complete Wild West, and they gave people money without, being too strict about it. And that has definitely changed. Anybody that's been through the loan process since then knows that, lending is a lot more strict than it was back then. And the second thing is inventory. If you go back to prior to the 2008 housing crash in the United States, we were at about 4 million available homes nationwide, where right now we're about 1 million, if not a little bit less, depending on how you want to look at the numbers. So quite a bit difference in inventory. Completely different circumstances. So, recession is scary. It's getting, we're going to have to see how it affects other parts of the economy, and that could definitely have a trickle down effect on housing and should definitely cool things off. But like I said, historically, housing has always persevered and actually done well during, a vast majority of recessions that we've gone through as a country. So keeping that in mind, if you or any of your clients have been on the fence as far as purchasing or moving forward with a loan of some sort, with rates improving, over the last couple of days, with hopefully they continue to improve, now might be, the best time to get off the fence and, make that purchase, do that cash out refi to consolidate that, do whatever you're looking to do. Just because, like I said, it looks like, we might be turning the corner as far as rates go. Obviously that could be different for other parts of the economy. But as far as, mortgage rates, we might have come out, you can't say for sure, again, your crystal ball is as good as mine, but looking at how things do historically, it looks like we might have peaked out where we were in mid-June, and from that point on, we'll continue to improve. So if you need any help with that, or if you just have any questions, please do not hesitate to reach out. Thank you all for watching, and I'll see you guys soon. Have a great day. Bye-bye.